Welcome to another deep dive. Today we're going to drill down into something pretty specific. A snapshot of the crypto market from just one day, June 14th, 2025.
That's right. We're using a daily alpha report from Z for that day. Think of it like a time capsule showing what analysts were seeing as, the really key signals back then.
Yeah, exactly. And our mission today is to unpack that snapshot. We want to pull out the important stuff, the alpha, and see what it tells us, especially about this theme the report flagged: accelerating institutional adoption.
Yeah, it's a fascinating way to look at it. This one report covers quite a bit: smart money, whale moves, project revenues, emerging trends, even market forecasts.
So we're going to try and extract the most important bits, really get a sense of what was happening beneath the surface on that particular Friday.
All right, let's jump in.
Okay, so where better to start than where the big money is going? The report kicks off with smart money movements and whale activity.
Yeah.
Well, it's interesting to see what the supposedly informed players are up to.
Definitely. And a few names really jumped out. Under smart money flows, CHAINLINK actually led the large caps with about $288,000 inflow on that day.
Okay, CHAINLINK makes sense, but why that day?
Well, the report directly linked it to a partnership with JP Morgan's Connexes network. And Connexes, that's their platform for tokenized assets like treasuries.
Ah, okay.
Yeah.
So smart money potentially moving in because of that specific institutional link, CHAINLINK's role in tokenizing real-world assets for big finance.
Yeah.
That's tangible.
Exactly. It suggests focus on that specific utility. But it wasn't just the big established names. Frost saw a $192,000 smart money flow. The report noted this was the highest across all the assets they tracked that day.
FOSS. Okay, maybe less familiar to some, but significant capital moving there suggests maybe some deeper digging uncovered something interesting.
Could be. And another interesting one was IBRL, that's related to the Brazilian real. It saw about $51,000 in institutional inflow.
So institutions weren't just looking at US dollar stuff, they were exploring other currency exposures via crypto.
Seems like it. The report framed it as growing geographical diversification in institutional interest. They're looking broader.
Okay, so that's smart money. What about the really big fish, the whales? The report mentioned BlackRock.
Oh, yeah. BlackRock's Bitcoin accumulation was relentless. The report noted they picked up 10,334 Bitcoin over just the 5 days leading up to June 14th.
10,000 BTC in 5 days. Just BlackRock.
Yeah, and here's the kicker. Compare that to the daily mining output back then. The report put it at around 450 BTC per day.
Wait, so BlackRock alone was buying more than 20 times the new daily supply.
Exactly. Over that 5-day period, yes. It just hammers home the kind of demand pressure one massive institution can exert when they decide to move strategically into an asset with, relatively constrained new supply. It's fundamental.
That scale is just staggering. And it wasn't just Bitcoin seeing this kind of whale action, right? Ethereum too?
For sure. The report highlighted an Ethereum whale, apparently linked to consensus, adding another 5,463 ETH. That was worth about $14 million then.
Adding to an already huge stack, I imagine.
Oh yeah, the report said they already held over 166,000 ETH. So serious conviction, doubling down.
And wasn't there another one? Deploying stablecoins.
That's right. Another major ETH whale put a massive $186 million in USDC to work, buying up over 70,000 ETH. The report noted the average buy price was around 2,647 ETH.
Wow. $186 million into ETH at that specific price level? That's not messing around.
Not at all. It signals real belief in value at that point from someone with very deep pockets. These aren't small bets. They're significant strategic allocations.
So tracking these movements, it isn't about trying to copy them second by second, is it? It's more about seeing the evidence. You see these huge balance sheets moving capital strategically into crypto. It confirms that institutional adoption theme isn't just talk.
Spot on. It shows the theory meeting reality with actual large-scale buying.
Okay, so that's the money flow. Let's switch gears a bit. What about the projects themselves? Are they actually, making money? The report looked at revenue generation too, right?
Yes, and that's crucial. In a market often driven by hype, seeing real revenue suggests sustainability, product market fit. The report had some pretty impressive figures for June 14th.
Like Hyperliquid, the number there seemed massive.
It was eye-popping, $4.54 million in daily revenue. But the really interesting detail, 97% of that revenue was automatically used for token buybacks.
Right. So the platform makes money from trading fees, And then almost all that money goes straight back into buying its own token.
Exactly. And the report mentioned Hyperliquid apparently had around 80% market share in DeFi perpetuals at the time, which explains where the revenue came from. It creates this direct feedback loop. Usage drives revenue, revenue drives buybacks, which supports the token. It's a powerful mechanism.
That is a fascinating model. Okay, who else was generating significant revenue? Spark Protocol.
Yep, Spark Protocol was noted for hitting a $200 million annualized revenue rate. What stood out there, according to the report, was that this was happening before their SBK token had even launched.
So strong demand for the actual protocol, even without the token incentive or speculation.
It seems that way. Suggests a solid underlying product. Then there was Maple Finance, showing $1.4 million in monthly revenue.
And the report made an interesting comparison there, didn't it?
It did. It pointed out that this $1.4 million monthly revenue matched levels seen back in February 2022. But back then, Maple's token price was trading like 3 times higher.
So, same fundamental performance, very different market valuation. Makes you wonder, right? Is the market missing something, or has the context changed?
Exactly. It prompts deeper analysis. The report didn't just focus on the established players, though. It also flagged some emerging revenue stars.
Like who?
Syrup was mentioned, also hitting $1.4 million monthly revenue, matching its previous highs, similar to Maple. Derive had apparently generated $5 million in total fees since they launched their V2.
So showing traction for their newer version.
Right. And Linux collected $6.64 million in fees. But the key point the report highlighted was that it had distributed $10.3 million to voters in its system.
More distributed than collected. How does that work?
Well, it implies other incentives or prior reserves might be involved, but the core point was the distribution mechanism. Revenue wasn't just hoarded. It was actively flowing back to participants who governed the protocol. It's about aligning incentives directly with usage and governance.
Okay, so tracking revenue gives you a different perspective. It shows which projects are building real economic engines, not just relying on, narrative or future promises. It's a measure of sustainability.
It adds that layer of fundamental grounding, which is always good to see.
All right, beyond the money flows and the revenue numbers, what about the bigger picture? The report looked at thematic trends too, right, under emerging narratives.
Yeah, this is where you get a glimpse of maybe where things are heading next, where the innovation is bubbling up. One big theme was AI x DeFi integration.
AI and DeFi. That sounds complex. What did the report highlight there?
It mentioned Yup AI coming out of stealth mode. They'd apparently raised $33 million, led by A16s, which is obviously a major VC.
$33 million for what exactly?
For AI model evaluation, specifically running on the Base and Solana blockchains. So, big VC money betting on this specific niche, using AI within crypto ecosystems on these high-speed chains.
Interesting. Any other examples?
Magic Newton was noted for hitting over 1 million users, plus it had backing from PayPal Ventures.
PayPal Ventures. Okay, so that shows mainstream fintech players are getting interested in this AI crypto intersection too. It's not just crypto native VCs.
Right. And Inference Labs was mentioned for partnering with OpenPad to do AI-driven Web3 analytics. So building practical tools using AI to understand the crypto space itself.
What kind of things can AI actually do in DeFi or Web3? Is it just trading bots?
Oh, it's broader than that. Think analyzing complex strategies, optimizing yield, detecting fraud patterns much faster, or like Yup AI, even assessing the quality of different AI models themselves.
Right.
It's applying sophisticated analysis to crypto's unique data and problems.
Gotcha. Okay, another narrative flagged, and this one ties right back to our main theme, was Bitcoin treasury adoption.
Absolutely. This is huge for the institutional story. We're talking traditional companies putting Bitcoin on their balance sheets.
And the report had some big examples from around June 14th.
It did. Trump Media, for instance. Their $2.3 billion Bitcoin strategy had reportedly just been approved by the SEC.
Wow. A publicly traded company. SEC approval for a multi-billion-dollar Bitcoin allocation. That's significant.
Very. And GameStop was apparently exploring a $1.75 billion Bitcoin purchase, another familiar name.
Right. And wasn't there another one? Mercury?
Mercury FinTech, yeah. Planning an $800 million Bitcoin treasury. So it wasn't just one or two outliers. Seeing multiple companies, including publicly listed ones, doing this suggests a real shift in how corporations are viewing Bitcoin maybe as a reserve asset, an inflation hedge. It legitimizes it beyond just speculation.
It certainly signals a maturation of Bitcoin's role in the broader financial world. What was the third narrative?
Stablecoin infrastructure. The space is always evolving, and it's critical for usability.
What were the highlights there?
Shopify integrating USDC payments, specifically using the Base network. That's a massive e-commerce platform enabling crypto payments via a stablecoin on a specific layer too. That's real-world adoption.
Definitely. What else?
Circle, the company behind USDC, was very active. They minted $350 million USDC around that time, with a large chunk, $250 million, specifically going onto the Solana network.
So high demand for stablecoins, and maybe a preference for Solana speed or cost for large transfers back then.
Could be, but maybe the most forward-looking point was that the report mentioned Walmart and Amazon were exploring developing their own proprietary stablecoin.
Really? So the retail giants might want their own versions, not just use existing ones like USDC.
That's the implication. It suggests they see huge potential, but maybe want more control or features tailored to their massive ecosystems. It could signal major future competition or just a whole new evolution in stablecoins driven by these giants.
So tracking these narratives, AIX, DeFi, corporate Bitcoin treasuries, stablecoin evolution, it's like seeing the different paths the industry is exploring. Gives you clues about where innovation and capital might flow next.
Exactly. It's about understanding the potential futures being built right now.
Okay, finally, the report didn't just look at these specific areas. It also gave a kind of market weather report, didn't it? Price targets, overall sentiment.
Yeah, the price targets and market analysis section provided that snapshot for June 14th. For Bitcoin, it was trading around $104,993, slightly down on the day.
And the report had targets.
It cited a range of $108,000 to $110,000 based on completing a bull flag pattern on the charts.
Right, a bull flag suggesting a potential continuation of an uptrend after a pause. And support.
Support was noted around $102,000. Crucially, the report reiterated that even with this sideways price action, that big institutional accumulation like BlackRock's was still happening.
Okay, what about ETH?
ETH was around $2,533. The target range mentioned was $2,750, $2,850, seeing it as potentially breaking out of a tight 3% trading range it had been stuck in. Support at $2,450.
And there was something interesting about ETF flows.
Yeah, this was a potentially big deal. The report claimed that for the first time, inflows into Ethereum ETFs were actually outpacing Bitcoin ETF inflows around that period.
If that trend held, it could signal a rotation of institutional interest or at least diversification. What of Solana?
SOL was trading near $146, target range $165, $175, and the report explicitly linked this to a potential ETF approval catalyst.
So the market was pricing in the chance of a Solana ETF.
Seems so. The report even cited Bloomberg analysts giving it 90% approval odds at that time. So that potential news was clearly a major factor in SOL's outlook on June 14th.
The report also listed some specific trades, like BESRR trades.
It did. Mentioned longs on HYP, Pendle, RRA, and a short on something called SPX 6900. Now, we're not recommending these, obviously, but it shows how the report tried to translate its analysis into practical, actionable ideas for traders looking for good risk-reward setups based on that day's data.
Right. It shows the practical angle. It also mentioned upcoming catalysts and major unlocks, didn't it?
Yep. Things like token generation events, TGEs for P33L in Room, an airdrop for Sonic Season 2, the Floki mainnet launch. These are specific events the market was watching for potential impact.
TGEs and airdrops can definitely move prices.
Yeah.
And unlocks.
Yes, scheduled releases of previously locked tokens. Aptos, Connex, Vana were mentioned. Unlocks increase supply, so they're important to track. Interestingly, it noted Connex unlock was happening even as the protocol itself was apparently shutting down.
Shows you still need to watch supply dynamics, even when things go south. Now, all of this crypto-specific stuff happened within a broader context, right? Macro factors.
Absolutely critical. The report touched on macro events and assessed the overall risk level. On the regulatory front, it mentioned the SEC withdrawing some older DeFi proposals, a bill called the Genius Act passing a Senate vote, and the EU fast-tracking MiCA licenses.
So potentially a less hostile or at least clearer regulatory environment emerging.
That seemed to be the signal. Positive for institutional comfort levels, you'd think? But there are risks, too. Geopolitics, like Israel-Iran tensions causing big crypto liquidations and oil price spikes impacting risk assets generally, shows crypto isn't immune to world events.
No, definitely not. And traditional finance links.
Fed rate cut expectations were being priced into the markets, which generally influences appetite for risk assets like crypto.
So pulling it all together, what was the report's final verdict on June 14th?
The assessment was risk level high. Market sentiment, cautiously bullish, and that key theme, institutional adoption acceleration.
High risk, but cautiously bullish. Seems a bit contradictory.
Well, maybe not. It could reflect the inherent volatility and potential dangers in the market, high risk, but at the same time, recognizing the underlying strength coming from that institutional adoption trend, cautiously bullish. It's a state of productive tension, maybe.
That makes sense. So understanding that whole macro picture regulation, geopolitics, Fed policy, is vital for interpreting everything else. The whale buys, the project revenues.
It's the backdrop. You can't analyze the crypto market in a vacuum.
Okay, so to quickly recap our deep dive into this June 14th, 2025 report, we saw significant institutional money, both smart money and whales, making big moves, especially into BTC and ETH. We saw projects like Hyperliquid generating substantial real revenue.
We looked at those emerging narratives, AI meeting DeFi, corporations actually adopting Bitcoin for their treasuries, and the ongoing evolution of stablecoin infrastructure with big players like Shopify, maybe even Walmart and Amazon getting involved.
Right. We touched on the specific market analysis for BTC, ETH, and SOL around that time, including ETF narratives. And we grounded it all in the macro context, the regulatory shifts, global risks, and TradFi sentiment.
And running through almost all of it was that central theme the report identified, accelerating institutional adoption. It really felt like the connecting thread.
Well, thanks for joining us on this exploration of this specific day's market intelligence. Hopefully unpacking these signals gives you a clearer view.
Yeah, the goal was to pull out the core insights from that snapshot in time.
So we'll leave you with this thought to chew on. Based on everything we saw in this June 14th, 2025 report, BlackRock buying huge amounts of Bitcoin, Shopify using USDC on base, corporations planning BTC treasuries, AI mixing with DeFi, what do you think was the single most important signal or piece of information from that day for understanding where the crypto market was heading and why? Something to ponder.